Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So, no, this video is not clickbait. We have genuinely got access to Phil Town's portfolio, which for me is extremely exciting. So over the past couple of years, and especially when I was first getting started in investing, Phil Town is someone that shaped my investment philosophy quite a lot. I've got all his books behind me here. He's only ever written 3, but I've got 4 back here because one of you, shout out to Luis, actually sent me a copy of one of Phil Town's books signed by Phil after going to one of his workshops. So I'm definitely a fan of Phil Town, follow his YouTube channel, have read all his books, have listened to literally every episode of his Invested podcast, many of them twice. So very, very excited to get into today's video and share his portfolio with you. He's recently started up a fund by the name of Rule 1 Capital, and all of these numbers are coming from a SEC file that one of you shared with me, which has come from the end of March. So this video today was initially going to be on a New Zealand stock analysis, but after being sent this by one of you yesterday, I was too excited not to change the video topic and get straight into this. So without further ado, let's just dive straight into Phil Town's portfolio, and I hope you enjoy. Now, really, there's one main headline to this whole first report from Phil Town, and it's basically that he's practicing what he preaches in terms of being in a large percentage of cash in his portfolio right now, because he believes that stocks on the whole are very, very expensive. And I'll leave a link to this report down in the description below where you can read some of his commentary and his thoughts on sort of where the market is right now and all those sorts of things. But if we actually get into the numbers behind the scenes, and I'll put a pie chart up on the screen here to show you some of the percentages and so on. Currently, Phil Town and Rule 1 Capital is working with roughly $65 million. And of that $65 million, we've got a very, very large percentage in either just straight up cash or in a money market fund, which essentially is cash for all intents and purposes. So we've got 22.9 million of that in money market funds, about 21.1 million of that in cash, and that gives us a total of about 44 million out of his roughly 65 million in cash. So a very, very high percentage, in and around about 70% of the fund as of March 31st was in cash. Obviously, we've had some very big stock market fluctuations in that time, so there's a good chance that that percentage has gone down, I would say, but a large percentage of the portfolio in cash, at least at that point in time. Now, as far as the individual positions, we have a lot of investments that are relatively even size. So we don't have one particular stock which makes up 40% of the portfolio or anything like that. We've got about 8 or 10 stocks here which are all relatively evenly sized in terms of the position at the end of March. So that said, the biggest investment at the time was Bank OZK. I am not super familiar with the banking industry generally, although Phil Town did provide some commentary on this particular holding in his letter to his investors, and he basically said that it's one of the best run banks in the country. Recently, they've sort of gone through a very Rule 1 event type scenario where they've basically made loans on several property developments that essentially the market views as extremely risky. Phil Town believes the market over the long term has got that wrong, and that's one of the reasons that he's made the investment in Bank OZK. So he was able to buy that at less than tangible book value. Comparative companies in this industry typically trade at more like 2 times tangible book value. So that gives him a significant margin of safety with going into that investment. So as of the end of March, that was about $4.1 million, and it was his largest position at the time. So if I just quickly rattle through the rest of the portfolio, we have Sturm Ruger & Co., which is about $3.1 million. They are a gun company, for those who don't know. CF Industries Holdings, this is a company I've actually looked at before, and it's one that I know Sven Carlin has done a video on, so I'll leave a link for that in the description as well. CF Industries is basically a nitrogen fertilizer manufacturer. So It's interesting from the New Zealand perspective because in New Zealand, nitrogen fertilizer is definitely an industry that will probably decline over time, if not just stay very flat. And that's largely because some of the freshwater environmental regulations that are coming in New Zealand. So that is not the case for many of the international markets that CF Industries services. And they've experienced pretty solid revenue growth. Again, I'll put a screenshot up here. They've experienced pretty good revenue growth over the last few years. So CF Industries is all about nitrogen fertilizer. Goldman Sachs, I'm sure you're familiar with it, probably the best known investment bank in the world. Ulta Beauty, definitely not a company I would think of when Phil Town is talking about things that he likes to invest in. But Ulta Beauty is a makeup company. Berkshire Hathaway, we're all familiar with Berkshire Hathaway. That is Warren Buffett's holding company, investment company. About a $1.4 million position at the time of this report coming out. Southwest Airlines, so Phil Town did own one of the airlines at the end of March. Southwest does have a lot more domestic exposure than international, so there's a good chance they won't have been hit quite as hard as some of the other airlines with all the travel restrictions and so on, but obviously still having a very rough time of it. Gildan Activewear was about a $1.39 million position at the end of March. Gildan make clothing, as the activewear part of that suggests. And this is one he's actually spoken about on his podcast a number of times in the past. So Gildan previously went through sort of an event where there was an Egyptian cotton crisis, a large shortage of cotton, and the price for cotton went up very, very high. And Gildan basically came out and said, we're probably not going to make very much money over the next 12 months, but other parts of the world will plant cotton because prices are so high, and within the next year or so, prices will be back to normal, the business will be back to normal as well. So in the short term, that created a massive downward movement in the stock price. Phil Town was able to take advantage of that downward movement, knowing that over the even short and medium term, Gildan was likely to get back on track, and you've got a great business long term. So interesting to see Gildan in the portfolio again now. Again, I'll put a screenshot up here because I know this particular stock has moved around a lot, and I suspect that Phil Town obviously again believes that that's undervalued with all the fluctuations that have gone on with Gildan. So that's the next one there. Boeing is about a $1.2 million position at the time of this report coming out. We all know Boeing, again, they've kind of been hit, with sort of two events at the same time. So they had the 737 MAX issues, and now they've obviously had their biggest customers, which are all of the airlines, going through a lot of strife at the moment. So Boeing has moved around a lot. And the last one is Seritage Growth Properties. So this isn't one I know a huge amount about, other than Guy Spear also happens to own it. So there's a few other value investors kind of in Seritage Growth Properties. But at the time of the report, this was about a $1.2 million position. Now, being able to get some insights as to what stocks Phil Town owns in his portfolio is certainly very interesting, but really the main headline that I got out of that particular update was that the vast majority of the portfolio is in cash. So if the stock market fluctuates downwards, Phil Town is likely to do much better than the market because he's got that cash basically holding his, sort of pulling his returns back up towards zero when he's got stocks going down and cash basically staying the same. But when the stock market goes up, then he's still going to have that cash kind of pulling his overall returns back to zero. So he's likely to do very, very well and be able to put cash to work at attractive rates, as well as not be down a huge amount if stocks do fluctuate downwards, which it clearly looks like he's expecting. But if stocks again continue to go up like they have done over the last decade, frankly, it could be tricky. And for myself personally, I'm also still in a large percentage of cash. I've only made, I think, one investment all year, and that was adding to an existing position. So I'm definitely still doing a little bit of camping out and waiting for opportunities to come as well. So that's really the headline for me from Phil Town's stock portfolio. One of the very cool things we get to see, though, which you typically don't see in other SEC filings like a 13F, like you might get for Monis Prabhai or Warren Buffett, is actually Philtown's option portfolio. So we've got a list here of, as of the 31st of March, what put options had Philtown sold. If you don't know what a put option is, basically it's an insurance policy. So essentially what Philtown has done here is he's sold insurance to other investors, and that insurance policy basically says that if your stock goes down beyond a certain price, so for example, he's got Berkshire Hathaway in here with an exercise price of $180 a share, that's on the B shares. So if someone owns Berkshire Hathaway at say $200 a share at that time, Philtown can sell them these put options, sell them this insurance with a strike price of $180 a share. If Berkshire Hathaway then goes down to 160, that investor can say, you said you would buy these shares from me at 180. So it's a way of other investors protecting their downside, and it's a way in this situation for Philtown to collect some money in terms of getting these sort of insurance premiums up front from selling these put options, but it gives the opportunity for him to buy companies that he really likes at attractive prices if they do go down. So the downside to a strategy like this really is that if the stock goes up, you don't capture that upside, and if the stock goes down really, really dramatically, you potentially you don't have as much money possibly to put to work at those really low prices. But really it's a useful overall strategy. And he also talks about matching this up with call options in some of his commentary. So again, feel free to check that out in the description if you're interested in reading more about that. But one of the reasons that I really like this is, for me, I think when he's selling put options on stocks and offering this insurance on particular companies, you don't just sort of sell put options on random companies in order to collect premiums. The way that Philtown, to me at least, looks like he's managing this is he's selling put options on companies that he would really like to buy at a certain price, but they're not quite at that price yet. Some of these are already in his portfolio, and some are not. So in a lot of ways, I think this really gives us some good insights into basically Philtown's watch list to a large extent, and some of the prices where he thinks he is beginning to at least start getting a margin of safety, and he would start to put some of that money to work. So I'm going to put up a series of screenshots here. The first one is just going to be straight up Philtown's options portfolio. The other one is going to be the stock price of these particular businesses, because quite a number of these options or quite a number of the stocks in these put options have actually fluctuated downward quite a bit over the last couple of months, to the point where many of them have actually reached the exercise price for these particular options. So with Bank of America, this was a relatively short-term one. So this was expiring on the 3rd of April, and the exercise price was $17.50. Now the 52-week low for Bank of America is $17.95, so that option would never have been exercised. Philtown would have collected the premiums, but he would never have been forced to buy those shares, because it wouldn't make sense for the owner of that contract to exercise the price if he can sell it at in the stock market at a higher price than what Philtown sort of had insured those shares at. So Bank of America, that's one that wasn't in the existing portfolio, but he does have put options on it, so interesting to see that one is potentially attractive for Philtown at the right price. Sanderson Farms, so this is basically a chicken producer, a poultry producer, and this company has an exercise price on the put options of $90 per share. 52-week low is $102.13, so it has not gotten there. Berkshire Hathaway, we have an exercise price of $180 per share, 52-week low of $159.50. So chances are, in my opinion, that Philtown now owns a little bit more Berkshire Hathaway than he did when this report first came out. Gildan we're seeing in there, so an exercise price of $22.50 and a 52-week low of $9.42. So substantially less than the exercise price. So that stock has definitely been beaten up, and again, these contracts are likely to have been exercised. One of the other things you'll see here is that there is quite a range of different kind of expiry dates on each of these options. So some of them are quite short term, others go into 2021 and so on as well. So that's something to keep in mind. Many of these he'll still be providing that insurance option to purchase the shares even into next year. So in fact, all of the rest of these put options have reached the exercise price over the last couple of months. So every single one of those, the person who owns these put options had the opportunity to exercise them and get higher prices than they would have been able to get in the actual public market. So just to quickly go through those, so after Gildan we've got Boeing again, Ulta Beauty, Boeing a second time at actually a different strike price. So we've got Boeing in there at $225 a share, and then Boeing at $165 a share. And Boeing actually has a 52-week low of $89 per share. So this is a position that at the time of writing this report, Philtown was down on, but certainly sounds like he may have added to that again. CF Industries, so again, we've got this one in here. Strike price of $27.50, 52-week low of $19.73, so very likely to have been exercised again. The Goldman Sachs Group, strike price of $170, 52-week low of $130, so that's another one that's gotten there. And we also have Ulta Beauty again, and this is at $175 a share, and the 52-week low is $124 a share. So again, one that has likely been exercised. So that is Philtown's portfolio. Philtown, like I said, is someone who has shaped my investment philosophy quite a bit over the last couple of years. So I was very excited to see that. Also keen to hear your thoughts on what you think of Philtown's portfolio as it stood at the end of March as well, and some of the changes that you think he may have made over the last couple of months with the options he had set up and so on. It is really cool to see an investor that you really like and admire. It's cool to see their portfolio in a lot more detail than you can see in a 13F typically. So we sort of get that with Warren Buffett and Berkshire Hathaway. You can kind of see how much cash he has and those sorts of things from the annual report, but you really don't get that in a lot of the 13Fs. It's hard to see what that stock portfolio looks like in the context of all the other things that they might own, whether that's cash or options or private businesses or anything like that. So very cool to see, and I do hope you enjoyed the video, but that is all from me today. I hope you enjoyed, and I will see you in the next one. Cheers.